Hey everybody, it is Wednesday. Short day in the stock markets in the United States today, but we all know when the stock markets are closed, that's when crypto recovers. Let's jump in. I'll talk about some whole bunch of on-chain stuff today. Sell side risk, which is a little bit scary, but we've been holding on to a key level. Looks like that's going to hold too. But I will share some stuff that is a little bit teetering on the brink. But we'll also talk about how the CME Gap was closed and a lot more news. So thank you all for coming. This one's called Sell Side Risk. And thank you as well to Sean Donnelly and everybody else for coming today. Let's go. No financial advice. Let's look at the Bitcoin monthly returns. We are now down 3% for the month of July, which isn't bad at all. I mean, Bitcoin can move 4% in a few hours. So 3%, not catastrophic yet. We're not writing off the month yet. Let's get into a little bit of the news. In case you missed it yesterday, I did talk about this yesterday, but it's huge news. Tom Lee from Fundstrat confirms Bitcoin to hit 150,000 by the end of the year. And that's kind of a 2x from the all-time high, which is pretty staggering. Again, why it's staggering is this guy you can rely upon. He makes, sometimes people consider them outlandish projections, and he's bang on. And he's been extremely good since 2020. So we'll see where this goes. Let's talk a little bit about the hedge funds and what I call the carry trade unwind. This is the top Bitcoin ETF exposures from the 13F filings from Q1 2024. We are getting the new ones soon. Thank you, B-Man, for coming. But if you look here, the biggest holder of Bitcoin, about 27,263 Bitcoin, were held by a firm called Millennium. They were in it for the carry trade. I believe they have unwound that, especially when you look at where they invested and which funds and how much they've been unwound over the past 2 to 3 weeks. I think that's gone. But we do have the new 13F filings for Q2. I do expect some interesting pension funds to be in that list too. Now let's get into the charts. A lot of charts today. First of all, sell side risk ratio, the name of this video. And this is inspired by Jesse Trading. And just a reminder, the sell side risk ratio measures the total profit, realized profit and loss by investors compared to the assets realized cap. So a simple explanation of that is high values means investors are selling at significant profits or losses, suggesting that the market is out of balance and high volatility is likely. Low values means most coins are being sold near their break-even cost, indicating that the market equilibrium is there, and there's also low volatility. Currently as well, the short-term holder sell side risk is very low. It's seen only 5% of the time historically, and this suggests that the market has reached a balance during this consolidation or chop-solidation, as we call it, hinting at a potential spike in volatility real soon. Again, we don't spend a lot of time down here, and the next move typically will be an explosive move, probably to the upside, but there's a little bit more. Volatility, we've talked a lot about that lately. After several months of stable prices, we've seen a big drop in volatility over time. And if you look at the two little blue lines there, it's kind of compressing, which means a spike is incoming. Which side will we go? We shall see. And this model measures the 30-day realized volatility across different periods: 1 week, 2 weeks, 1 month, 3 months, 6 months, and 1 year. And when all these periods show a negative 30-day change, it signals that volatility is decreasing and investors expect lower volatility ahead or a breakout. So watch this carefully. Next, another thing to be a little bit concerned about is what I call mind the gap, and watch out below 60K. This is the URPD metric to assess the concentration of supply around particular cost basis clusters. Now, currently, the spot price is near the lower bound of the large supply node between 60K and 73,800, which is the all-time high. And this aligns with the cost-based models of short-term holders. And that's about 2.65 million Bitcoin, about 13.4% of the circulating supply, located between that 60 and 74K cluster. And small price fluctuations are able to substantially affect the profitability of these coins and investor portfolios. And overall, this indicates a risk that many investors may be sensitive to any price drop below 60,000. I've been talking about the short-term holder realized price, about 58.3. Now this 60K level. If we do dip below, a lot of people will get nervous because they'll be losing money, and sometimes that causes them to sell, which can cause cascading liquidations and potentially a dip to 50K. I don't see that happening because there's too many big buyers right now in the space. But there's more. Let's talk about the 200-day moving average. I remember I tweeted last week, I said once Tesla breaks through the 200-day moving average, it'll break out. The price of Tesla at 200-day moving average is $205. Once we got through that, went straight up. Right now, it's about 245, and that's just in 2 or 3 days. So this 200-day moving average, though, can cut both ways. Let me explain for Bitcoin why it's so critical. Again, this is the Bitcoin Maya multiple, and typically the bear market is normally a sustained period below the 200-day moving average. The 200-day moving average is often a very simple indicator for assessing bullish or bearish momentum. Making any breaks above or below is a key pivot point, like I explained with Tesla. And the 200-day moving average currently resides at 58K, once again providing confluence with other on-chain price models like short-term holder realized price and like that 60K we just covered on the Mind the Gap chart. And watch this as well. Back to short-term holder cost basis. This is kind of critical. As you mentioned, the cohort, this chart here denotes +1 or -1 standard deviations from it. And this provides insight into areas where these price-sensitive holders could start to react. So red is significant unrealized profit signals, a potential overheated market. That price level is $92,000. Typically, we'll probably hit 92K, but we don't know when. Maybe 3 months, 6 months is probably the target that I have. Now, the break-even level of the short-term holder cost basis is around 60K, 61K, and the spot price is currently very close to that. And then the blue level is significant unrealized loss signals, potentially very oversold market. Wow, it would be nice to see 50K. That's where this line goes to right now, but I don't see that happening. Not with all the stuff happening. Thank you, Canuck on Thames, the river in London. Hope I got that right. Now, we are still a little bit of trying to end some of these key charts on a quite a positive note, and to ground our position in the cycle, we have to look at previous cycles. So red, which is very similar to being this one here, under the 200-day moving average bear market, this is akin to another view here. Deep bear markets is when prices are below the realized price. The early bull, which we've enjoyed since the middle of November 2022, the prices trade between the realized price and the true market mean. Now we are still in the enthusiastic bull market period. Prices trade between the all-time high and the true market mean. That's exactly where we are now, ladies and gentlemen. We have yet to hit the euphoric bull market, where prices trade above the previous cycle's all-time high. We got close. We were in there, breached it a couple of times. But again, at the moment, prices remain within this enthusiastic bull regime after a few brief excursions to the euphoric zone. So let's watch this carefully. And again, I firmly believe that the bull market is still on. Couple more charts. I did warn you a lot of charts today. Market profitability also remains robust. The Bitcoin market is in an interesting spot. This key area here is we're at 2.04, the MV/RV ratio. But most short-term holders are actually still underwater, and a multitude of volatility measures are heavily compressed, suggesting a large move is on the horizon. We don't stay down here for long, especially in a bull market. Now, again, this 60K level, let's check on the real-time price right now, because 60,500 came off the bottom. We hit 59,604 today, which is a little bit low. But again, it got bought up very fast. I fully expect once the stock market close, will rebound pretty heavily. Anyway, the 60K level is key. It must hold. But again, per the MVRV, we never stay down here at a 2x profit multiple for long. And this means we are still heading into the enthusiastic and euphoric bull market phases. One more. Short-term holder net loss hits minus $2,100. This is a cool chart from Crypto Quant. This shows you of all the short-term holders on average, with all the exchange activity they've done over the last 155 days, they are losing on average 2,100 per Bitcoin. So if Bitcoin, say right now it's at 60,500, the average cost basis for the short-term holders is, let me get this right, 62,600 is the average price. I'm wondering, is anybody here, is that their average price of Bitcoin that they bought lately? Thank you, Piper, for coming. So that is a another key indicator. And again, having such a negative short-term holder cost basis typically means we're close to being bottomed out, my interpretation at least. And there's a little bright spot too. This is from Crypto Patel. Over $1 billion in short positions will be liquidated if Bitcoin can go up just $2,000 from where we are now, about 62.5, 62.6, that would wipe out over $1 billion in shorts. So watch this market closely. This could be huge. And always try and avoid high leverage out there. Don't get wrecked. It takes a lifetime to make it, a second to lose it. If you are playing with leverage, only play with 1% of your bag. 1%. That's all I do. I entered a perp this morning. So anyway. Next, there will be the playlist here and at the end of the video for just Bitcoin and Bitcoin proxies. It was heavy chart day, so let's just talk about the ETF black hole. See where we are, day 120. Woohoo! And it doesn't sound like many days, but that's over half a year. Anyway, these are trading days, not including weekends and holidays. So you can see here, we had a bit of a meager day. Big dump from Grayscale, 32.4 million. But BlackRock was in, Fidelity was in, Bitwise a little bit negative, ARK was positive, HODL was positive. So all in all, not too bad. The macro update, we have had nothing like what we had around the day 100 period and the day 35 to 45 period. We haven't had those crazy times yet. And it is the summer doldrums, but I do expect price action to rebound. The investment advisors are still very nervous about Bitcoin. They're still sharpening their pencils. They're still trying to figure out, should I advise my clients to dip their toe in here? I said, yeah, 2.5% allocation. Go for it. Everybody needs to have at least that allocation. Financial advice, I believe. And we've had 5 days up, and we had our first down day in 5 days, which isn't bad. Again, we are drugged down by quietness in the market and also by the Grayscale dumpage. We had 218 Bitcoin given back to the system yesterday, which is not a lot considering how much Mr. 100 and other players bought over the past couple of weeks. So it's not a big dump. But again, things are very, very quiet during the summertime. Unless you're in some volatile names. By the way, I'll be on later with a Tesla video called Power. It is going to be a banger. Super interesting. And by the way, Grayscale, they did dump that 32.4 million yesterday, but still, it's almost bled out. They can't dump that much more anymore. And again, this is part of the hedge fund unwind that we've seen right here. I was wondering, why would anybody buy Grayscale? Well, they were doing it for short-term speculation. Answered. We'll check on funding rates tomorrow and see what's up there. Oh, I forgot to mention. This was hidden on the back. The CME Gap was filled. This is probably the most important chart I'm showing today. The CME Gap occurs when the price of Bitcoin futures on the Chicago Mercantile Exchange opens at a different price than it were closed in the previous trading session. And this typically happens over weekends when the CME Gap is closed because crypto trades 24/7. And the gap fill, traders observe much of the time that these price gaps tend to get filled eventually, meaning that the price moves back to the level where the gap was created. And this is a common phenomenon in many financial markets, not just crypto. So anyway, that was filled, which tells me that this 59,600 level is good support. And we should probably go up from here. Again, it's been a bit of a lackluster period. The chop consolidation, bouncing between that 60K and 70K. But I think we'll hold around 60K. I don't see us going to 50K. So don't place your limit orders down there. If you have no bag, you might have to go a little bit higher. Anyway, thank you all for coming. I'll see you all in a few hours. And have a great day. Bye-bye.